Hello, everyone, and welcome to Advancing Capital to Secure the Future of Business, part of Day 4 of the 2025 Action for Impact Summit. I'm Jen Earle, CEO of the National Association of Women Business Owners. For 50 years, NAWBO has supported women entrepreneurs and business owners, and we know that access to capital is one of the most powerful tools for growth and long-term impact. Today's conversation is about unlocking that power. We're joined by leaders who are not only investing in women founders, but transforming the capital landscape to make it more inclusive, strategic, and founder aligned. I'm excited to welcome Joy Fairbanks, Managing Principal at Fairbanks Venture Advisors, and Melissa Bradley, Managing Partners at 1863 Ventures. Together, we'll explore where capital is flowing, what founders need to know about 2025, and how we can help all women ensure they have the resources to scale and lead. So let's get started. Our first question, how would each of you describe the current capital landscape for women entrepreneurs in 2025? What funding paths are opening up, and where do founders still face the greatest friction when trying to scale their businesses? Melissa, we'll start with you.
Well, first of all, thank you so much. I am honored to be here. I wish I could say the statistics were better in 2025 than they were in 2020, but they haven't changed. I think we can safely say that women are still highly underfunded. I think there is the general, I'd say, sexism and other issues, but there's also the macroeconomic environment, and so I think we're seeing fluctuating interest rates. I think you're seeing some skittishness by investors, certainly as a VC. LP is a little bit more skittish, but I don't know that that's relevant, right? I think that what I have seen in working with women founders for over 40 years is that we are quite resilient. I think that you're finding more folks who have done a better job of planning and saving, and so they're leveraging their own finances to get started. And then I would say I've seen a dramatic increase in angels, particularly female angels, whether formal or informal groups. So while the stats don't say optimism, I think that there is some movement to make sure that women entrepreneurs are still thriving.
That's amazing. Joy, do you have any feedback too?
Yes, I think I agree on a lot of these points that Melissa had made. I mean, these are challenging environments to fundraise, both on the founding side and the capital allocation side. But we've come such a long way. I know we have a long ways to go, but we've come such a long way because we have just an incredible rise of women founders across verticals, technical founders. We have an incredible rise of women capital allocators. And we just have allies that are able to see our talent. So I think just in terms of getting people out there and telling the stories, it's been an incredible improvement than in the past. Because before, and I would say not that this has stopped, but there has been such ignorance in terms of the abilities of different groups of people to bring to the table in technical solutions, and in particular, there's a lot of preconceived notions. But in terms of the environment overall, I think if you put yourself out there, you get yourself known, and you present yourself as a strong investment opportunity, you're going to get traction because there's a lot of dry powder out there, despite it being a very challenging environment. And I'll stop there. I know
I love that. And that actually
question.
That leads us right into the next one. What does true capital readiness look like in 2025? And how should founders prepare themselves and their companies before engaging with investors to increase their chances of success?
The key is to engage with people, to learn from people before you really need that capital, before you are really ready to sell the customer the product. You have to learn what people want. So the next step is, well, how do I gauge? How do I talk to people? And I think the number one thing is you have to understand the language of your audience, whatever that audience is. So the typical thing, a typical error that a founder makes is the founder will get very excited about their product. And this is particularly true for technical founders. You've worked hard on it. You see this potential that perhaps that you think other people can already understand. At the end of the day, you really need to talk about your company, about your product as an investment. So it takes a very big mind shift to do that. And then when talking about your business, you really need to talk about key elements that an investor needs to understand to be able to evaluate you. So the first thing is, are you solving a problem? What problem is that? What problem are you solving for whom? Is that problem big enough for people to pay to solve it? Who else is doing this? What is the value add of your solution? How does it work? What is the market opportunity? How are you measuring your traction? How do you know if things are going well? And then there's many other elements to bring into that conversation with investors. But I think one of the number one elements you can bring is how you are learning as you're building your business,
Mm.
especially as an early stage founder. But honestly, this is a forever thing because even if you do something well, the marketplace changes, competition changes, customer preferences changes. So you always have to be learning. So that's the number one thing, is to talk about that discovery, the discovery of technical discoveries, customer discoveries, and always being customer centered. So those are the basic elements of how you engage with investors, when you engage with investors. The third element is, what is expected of you as you are raising capital at different stages. So when you are very early on, there's less that's expected in terms of quantitative information. You can talk a lot about what you are trying to achieve, and there's still um, data that you have to provide, such as how many customers have you talked to already as you're thinking about creating something? What do they say? But as you get more and more advanced, you have to come up with the data, quantitative and qualitative information for someone to evaluate you. And more of it is expected as you advance in your business development trajectory.
Melissa, do you have anything you want to add? It sounds sort of to me like you have to be emotionally prepared too. Like there's a lot of stuff that's going on in the background for you to show up confidently. From your perspective, Melissa, what would you add?
So I'd say, as somebody who invests in companies, and I've probably invested over 100 so far, I think the most important thing for me, and I want to caveat that as a venture capitalist and an angel, is, do you understand your finances? I think everything that Joy said is valid, but at the end of the day, I don't have more than 15 minutes to really make an assessment when I meet you. And I think that all of those things that Joy just mentioned, which are important, will manifest in the financial statement. And so I always tell people, own your finances. Don't use somebody else. Don't use an accountant, because the finances are nothing but the quantitative solutions that you are hoping to implement. And so the numbers speak to me. And I want to be clear that when I say numbers, it's not the bottom line. It's what are your margins, it's what your ARR, what's your MRR, what's your CAC, what's your LTV, all the various acronyms you can think of. But I think for me, that's where I go first when I look at a business plan, because that then says to me, this is what they expect. And then I go back and look at the plan and say, have they provided the right strategy that's going to yield those numbers? And so that's, if you haven't done that for me in 20 minutes, then we'll get back to you and probably provide you some other options.
Melissa, I am so glad that you brought that up because so many founders feel like they don't need to own their numbers. And especially at the earlier stages, I get these, feedback such as, do we really have to have the numbers? We don't have customers yet. I'm not sure what our sales are going to be in the future. I don't really have a hold on our expenses or et cetera. And I say, you know what? You first start with educated guesses, and as you progress forward, those guesses turn into actual, market supported data. But at the end of the day, you figure it out, you work with somebody else if you need to, but you do need to own your numbers, because all the other stuff that I talked about is the rationale for the numbers that are put forth. Because at the end of the day, as an investor, you make a decision on the numbers.
Yeah, that's great. Thank you for that. With so many capital options, including VCs, angels, CDFIs, revenue based financing, and more, how can founders cut through the noise to find the right type of funding for their stage and goals? What tools or networks can help them make smart decisions? Melissa, do you want to start?
Yeah, I think if we break it down, and I'm oversimplifying, but pre-seed, you haven't made any money yet. Seed, you're making a little bit of money. Series A, you're probably several $100,000. Series B, you're maybe $1 million. Quite oversimplified. I think the thing to think about it is twofold, right? What is it that you can afford to manifest back to the investor, whether that's debt or equity, and what are you willing to take on? I think that there are a lot of people who are very skittish about taking on debt because they're like owing people. There's a lot of people who are skittish about having a venture capitalist because now I'm going to part own the company and potentially have a board seat and a say. So I think the first thing is to really figure out, who do you want to be involved in your business? If you don't want any outside investors, you're probably looking at a bank loan, maybe an angel group who's not going to pay attention. But if you really understand that those of us who invest are more than just a check, I'm a serial founder. I've sold two companies. I think we oftentimes do this work not because we can write a check, but because we actually can give advice. So I think it is determining who you want to have in your company, how much do you want them to be engaged with your company, and then ultimately, what can you afford to pay back? If you are cash flow positive and you can service debt, great. If not, and you're building a high growth business and you actually think there's going to be some kind of exit, more than likely an acquisition, then I would say go for venture capital. But it's important to note that debt is best when you're slowly growing a business. Venture capital is when you're trying to quickly scale. And the final thing I'll say is, at the end of the day, it's going to be your gut, right?
Mhm.
Even though it's a check, it's about a relationship. And so while we do diligence on you, you should do diligence on us. Talk to our portfolio companies and understand, is this a relationship you want to be in? Because it's probably going to last at least 5 to 10 years.
Mhm. And where would they start? Like if they had how to cut through all the noise to figure out like where should I go? Like is it based on the size of their business? Like you had mentioned the different, they're either seed
Yeah.
or wherever. Like where do they go?
I think typically pre-seed, because you don't have any revenue, you're looking for grants, you're looking for friends and family, you're looking at maybe some angel groups, some pitch competitions. I think when you're seed, you're probably looking at angels. There are some venture capitalists out there, probably bank financing, assuming you have some collateral. Unfortunately, when you're starting a business, they're looking at your credit score, and if you've invested in your business, all those things become variables. But I would say probably a bank loan. I think when you see that you have actually mastered the business and you're growing and you have growth rates 10 even if it's just 1,000, now going to a couple of more thousand, I think that's when you have to decide, do I want to talk to a venture capitalist? I do want to echo what Joy said. It's a relationship. So don't call me when you need money yesterday. Call me when you need money 6 months from now. And then I think we have a conversation. I will say that there's no venture capitalist who wants to invest in a company that they don't think can bring the money. And so be open to hearing that conversation. Don't take it as a no. Take it as not right now or not a good fit, and think about some other options. But I will say that I think there's a plethora of individual angels who are willing to be there. I think revenue based financing is another option, whereby if you have a business that is selling products and you have some distribution channels, and cash flow is lumpy, recognize that you have to pay back that loan as the cash is available versus a straight line amortization of the debt. So I would say, again, spend time really understanding what your options are. And the best thing is always talk to another founder. Find out what they did well, but also find out what they didn't do well. Because I think part of this is we need to learn from people's mistakes and create this atmosphere of sharing, that I didn't get it right the first time. But I do think that it's important to, again, talk to folks and then really sit back and figure out not just what you want in the moment, but long term. Because once you get a venture capitalist in, it's pretty hard to get us out. And so you really have to be prepared that a bank loan, 2, 3, 5 years, but a venture capitalist is a lifetime. And so really be thoughtful. Again, I'll say, who do you want to be married to for the duration of your business?
I love that. Do you have anything to add, Jill?
Yeah, I think another thing to think about is what you're using the money for. Excuse me. Sometimes people don't realize that you look for venture investing if you have a rapidly growing business, not because you are struggling. Things are going well and you need investment to do even better. So, and venture money can't be a crutch for a weak business. So that's step one. Also, there are a lot of great businesses that just aren't venture investable businesses. And that's another thing to understand. If you do not have a company that's, on track to be, everybody has a favorite number, but let's say $1 billion business, but you have a company that's on track to be $100 million business, that's not necessarily venture investable in the typical venture investor timeline. The other thing to think about is, what are you using the money for? Because if you just need some capital very quickly to maybe finish up some product development, a small bit of financing, that doesn't necessarily mean you have to go do a kind of a formal capital raise, as opposed to, okay, you're taking this business to a very different stage. You've got product market fit, and you're going into, let's say, another geography, you're adding a product line. That's also a different kind of an investment call, so to speak.
Given the projected 30 trillion wealth transfer toward women over the next decade, Joy, how can today's founders position themselves to benefit from this rise of women-led capital and generational investment shifts?
because so much about, I feel, women founders is that it's just we have to we have to feel like we can do something 150% when we've already got it. So it's that confidence, and also the confidence that we can pitch to somebody who we think may not get us, but actually might if we just tailor the pitch. But the other aspect is like that many more people who understand, you know, women as business leaders, and I think having more of us as capital allocators is a plus on multiple reasons. One is on both sides we understand that we do more with less, and also we not to stereotype, we tend to be really detail oriented, and so all of these things are pluses on both sides. So more capital allocators, more people that are just much more careful about going through all the different aspects of due diligence than somebody else is. So these are some of the generalities that I look at. At the end of the day, both sides are looking to solve problems, and both sides are great at it. So and like anything, the greater diversity in terms of having that view in terms of who might use my product, as well as who might fund my product, who might fund my business, I think the better.
Yeah, that's great. AI, fintech, and data platforms are reshaping how investors source and evaluate deals. How are these tools changing the way capital is being deployed to women-owned businesses? And what should founders know about how they're assessed? Do you want to take those, Melissa?
Yeah, I think in this world of the wonderful interweb and all of these major systems, there's a lot of data, but we have to realize garbage in, garbage out. And so I think we should never assume that whoever you're speaking to is going to be well informed about what you're talking about, even though we know it's accessible. There's been many AI searches I've run and they're just highly inaccurate because they're pulling from what's available. So I think one is that know that we're using them as investors and we know that founders are using them. I think two, they're not a replacement for. So every time I see a business plan, I run it, being a professor as well, I run it through and I was like, if this is an AI business plan, I'm not even talking to you. Same thing for investors. I think there's many of us who say, hey, there's great tools and technology that allow us to move quicker and faster, but it's never going to replace our own intuitiveness and our own personal and professional experience to be able to assess these deals for an ultimate performance. I think we're seeing a lot of data platforms. And I think when you think about, we have quite a few SaaS platforms that are playing into the market. I think from a B2C perspective, they're great. I think B2B, we have to be careful that we're going to rely on something that, again, that is not necessarily going to be accurate. But I do think once you inside a business, as opposed to raising money, I think if you can nail a process manually, then to think about systems. Right? I always tell founders that technology is not a substitute for process. It is a way to amplify the outcomes of process. And so I do think that you do have AI and other data platforms that are very, very useful to help businesses grow faster. But at the end of the day, you've ultimately got to be able to run your business. It's almost like if you're driving and your phone dies, you've got to be able to drive with or without this technology. I would say the same for founders.
Yeah. Okay, our last question, ladies. As we look to accelerate change in the capital ecosystem, what's one bold step each of us, whether a founder, investor, or advisor, should take over the next year to help ensure more women can access and leverage the right kind of capital? Joy, do you want to start?
Okay. I'm sorry. Can you repeat the question?
Yeah,
I
what's
didn't.
one thing we can do, either as an investor or a founder or an advisor, to move the needle forward?
Um, I would say meet as many people as possible, and with an open heart and an open mind to consider what people have to say. And I think that's the number one thing that we can do. I'm very fortunate. I'm constantly meeting founders. I'm meeting fellow capital allocators. I'm meeting technologists that are creating great products. And I think the best that we can do to move the needle is just to get to know people, to help them amplify the message, to help introduce people to each other, and to just be just authentic humans focused on relationships. I wanted to echo the point that Melissa made before in terms of the AI and how useful it is, and any systematic process. All these processes are incredibly helpful to um, allow us to connect more humans together, but it doesn't substitute for the humans. It doesn't substitute for the baseline processes. So that's what we can do the most is bring humans together, help humans. And whatever technology we can use to do that is a plus.
I love that. And Melissa?
I think just if you get through the door to have some success, bring another one with you.
Yeah.
I love that so much. Yeah, and just say yes, everybody. Each one of us can just say yes more often.
That's right.
Ladies, thank you so much. As we close this powerful conversation, I wanted to extend a deep gratitude for your incredible insights, wisdom, and candor. And special thanks to the Women's Business Collaborative for scheduling this for us to have these meaningful conversations. So, super grateful for everybody, and I hope you have a great day.
Thank you.
Thank you.